Hey traders, Raghee here. Welcome to another episode of Charts and Coffee. Happy Monday, everybody. Hope everyone had a great weekend. We are going to be kicking off another interesting week. We've got some data, not a lot. So what's really great is that we can actually move through, as you can see here, the entire week without a lot of major economic data. And that makes for an interesting week because unless there's unscheduled economic data hitting, in other words, something that's just a headline or something that just sort of catches the market off guard because it's not on the schedule, we're going to be focusing mostly on a pretty intense earnings week. So how do we know what's coming up? Well, I'm going to share with you guys how I like to track earnings. And by the way, this week, I have the weekly watch list. So we have a different trader here under the Simper umbrella sharing their watch list process. So this week is my turn. So what I actually go through in some detail is the way in which I prepare for earnings. And none of what's coming out this week or even next week is anything that I'm preparing for now, right? The window is much bigger. So check out that weekly watch list video. I go into a lot of detail as to how we prepare using what I call 642. But two really important calendars to keep an eye on, especially during earnings season. This week is pretty light on data, but really, really heavy on earnings. And again, the market might be a little bit more prickly about events that it doesn't have on the calendar, what has not had the opportunity to discount it. All right, so let's kick off with our questions. First one of the morning. And here we go. My thoughts on the recent IPO, APP, and what do I think of Google? Okay, so here's the thing with any IPO. There's nothing that I can work with here. I'll anchor a volume weighted average price to the first day of trading, but I don't play IPOs. That's as a general rule. My best trades in IPOs come from anchoring a VWAP, waiting for the quiet and holding periods to expire. I think a lot of folks who perhaps looked at coin, didn't realize that. So when we have an IPO, you have a better shot at seeing the market possibly find a low, a volume ledge, and then move higher. But you're not going to know that in the first 1 or 2 days of trading. Direct listings, DPO, right? A lot of folks were pretty much caught off guard to realize that there's no holding period here. As soon as that thing's available, there's an instant cash out type psychology. These direct listings, whether that be work, whether that be spot, and now coin, they tend to see a lot of weakness in a much more I would say, exaggerated way than an IPO. So I, as a general rule, don't play new stocks until I have more data. And so eventually, when we have a little bit more data to work with, absolutely, I'll be open to seeing what kind of movement we can take advantage of. And in the meanwhile, I can also take a look at an ETF like IPO to see a little bit more mature IPOs and take advantage of any clarity, quite frankly, there. Okay, so your next question was Google. There's nothing I'm going to do at these highs. I mean, if you're looking at a shorter term time frame, no problem. Google was a perfect example. Let me show you here of a relative outperformer. And you might say relative outperforming to what? QQQ for sure. XLC, where it's heavily weighted within Facebook, absolutely. So if you have in the very bottom here, I've got my JT Trend Multi, which compares two symbols so you can find relative outperformance. So Google has been a relative outperformer in comparison to other NASDAQ, QQQ, and Q futures names. It's also been a relative outperformer within the XLC communications ETF. And then take a look. Look at the trend, double green, that preceded, let me show you here. Look at the double green that preceded these little yellow periods of time. Gang, those are straight up buying opportunities. Clearly, when you've got a stock like Google that is somewhat cost prohibitive to most traders, you're going to end up with call verticals, that kind of thing, but credit spreads. But none of those opportunities, as far as what I like, are available now. This was your window. This was your window. And again, if you keep an eye on the overall structure, not just what's happening now, but also what was the trend that preceded the current structure, you're going to have an edge on most traders who don't even look at structure. But there's nothing I will look at right now on the daily chart. Okay. All right. Next up is, hang on, gang, let me catch the next question. And that is, hey there, Gary. You just finished losing $1 million? Yeah, that is, and there's my bookshelf. Yeah, that's one of my favorite books on my shelf. It's one that it's been on my shelf for over 20 years, and I refer back to it a lot. It's one of those books that doesn't get talked about a lot in terms of psychology, but I think it's definitely one of the top 3 books. In fact, in terms of my favorite trading books, it's on the list. It's on the list for sure. I'm glad you liked it. Most excellent. Ford, sure. Ford and GM are on the list, and these are names that are tethered to the XLY. So let's do this. Change this up to XLY. And so I'm going to compare the structure of Ford to the structure of the XLY. Do I think that Ford's typically going to move with XLY? Absolutely. I like Ford where it's at right now. I like GM for that matter, where it's at right now. So I'm a big fan of both those. Ashit asks, please comment on GDX and GLD. So really quickly, if I have a breakout in oil, it doesn't mean I'm immediately going to look at oil stocks. I'm using a separate example just to show you that it's commodities wide. In other words, if I have a breakout in gold, I'm not immediately going to go look at gold miners. So everything starts with GC or GLD. And we had the 1, 2, 3 that broke out. One of the things that I have been giving the futures folks a heads up about is that we're not going to see the movement higher in gold until real yields drop. They don't have to drop a lot. They don't have to turn into a downtrend, but the breakout is not going to occur until we see the nominal yield of a bond minus the rate of inflation, that total, that sum, drop. All right. That's going to have a rate of change heading lower. Gold then has a chance of heading higher. What is one of the easiest ways to get real yield to move? Either we tick up in inflation, which we have been moderately, or we drop in terms of the yield of the bond, which we also have done somewhat moderately. You put those two together, two very important ways to look at macroeconomics. We know that real yields are dropping. Gold has a chance. Again, it's sort of the first domino to fall was inflation and bonds. Gold then is able to move higher. So that was a 1, 2, 3 pattern, a 1, 2, 3 pattern, a bottoming 1, 2, 3 that we talked about in the futures room. Now, GDX or GDXJ or NUGT, they're going to move in many ways. In this case, you can even argue this moved in front of gold. I am not a big fan of playing miners as a general rule, but if the pattern is there, and the pattern is there, those of you that have read the most recent, actually the last 2 issues of the Countdown Trader should already be very familiar with that pattern. And so check out at countdowntrader.com, check out Dow 1, 2, 3 continuation pattern, and then check out the most recent update from April 16. Is this trend going to continue? Those are both conversations about this, I call it an ancient pattern because it really is well over a century old. And you'll find there's a lot of other patterns that share this sort of structure. A lot of times you'll find a shoulder in a head and shoulders here. A lot of times those of you that are a fan of harmonics will find a piece of a Gartley here. There's a lot of application. I just like to go to the root. Find why you like something. You know, for example, I love a 1, 2, 3, and then go find the reason that it's applicable, where it started, you know, what it's supposed to communicate to you. And that means you're going to go further and further back within sort of trading analysis history And you'll find yourself more often than not reading about traders and analysts from the late 1800s, early 1900s. I mean, very little of what we look at is new. Even if you want to look at sort of more modern, you look at Darvis and the way that he used minor highs, minor lows, and a certain number of candles to automate support and resistance. And I've got Darvis running here too. So those are all very cool tools you can use. You'll notice we broke a Darvis 1, 2, 3. I've got a 140-year-old idea, basically breaking through a 60-year-old idea. I love it. And so, yes, I'm bullish on gold, but keep an eye on that ZB or TLT, either way you want to look at it. All right, next up, thoughts on RUN. All right, so my criteria for a run into earnings is that it has to be running. So I'm not ever going to play earnings bearishly. In other words, I'm always looking for some sort of move higher on earnings. That's number one. Could you play earnings bearishly here? Yes. I mean, the trend is down. So if we talk about a run, a run into earnings on run would typically mean a bullish play. Here, the only thing you could do is a bearish play. Again, I don't play earnings bearishly, and I will not play a run into earnings if the market is not double green, and this one isn't. So I don't have the setup that I'm looking for. My 642 is simply not applicable here. So this is a thanks but no thanks in terms of the way that I find earnings are most high probability. That's bullish when we have what I call a double green uptrend starting 6 weeks out. So thanks for the question. Next up, Prabish asks, happy Monday, Prabish. When the pullback happens, do you think it's buy time? Would NQ pullback from now considered a trend pullback? Well, so all of these have to be considered individually, right? So if NQ were to pull back, pull back to where? Pull back to this volume ledge, that would be pretty interesting. Would I buy if it pulled back to this volume ledge? I would definitely think about it. Here, I would definitely think about it. Here, my wave, no doubt. The problem is this. We need to know, why is it pulling back? How much did it pull back by? And ultimately, where does it land? And so I can't say, yes, absolutely, NASDAQ's going to be a pullback buy. But if we get a significant pullback, if we get a few days of downward movement, I will take it case by case, symbol by symbol. But yeah, I do believe we'd have an opportunity, but NAS would not be on the forefront of my mind. In fact, Dow would be, transports would be, industrials would be. And I would also then factor in, and this kind of brings me back to the weekly watch list that I believe Mandy already published in the options room, and my sector secrets folks, you guys have already gotten that, and I'll make sure the futures room, we send that out. But you've got to think about rotation. You've got to think about when the market is pulling back, if it's a buying opportunity, where? And a lot of times, don't always wait for a broader market index pullback. We may not get it. You may not get it for a while. Who knows? But what you do want to do is think about, if we get a rotation, right? That's another way to get opportunistic on pullbacks. So if we find that the hotter markets right now, and I walk through all the details of this in the video that accompanies the weekly watch list, we find the outperforming sectors start to weaken, there's a very specific place I'll start looking for where the money is more likely to flow. And so that's another way you can take advantage of pullbacks. All right, so let's take the second half of this question here. Joyce, yeah, SLV. So think of it this way. If the first domino to fall has to be bonds, and the second domino to fall would then be gold. Silver would be after that. So silver really can't be considered a great setup until, well, the 1, 2, 3 completes, which it did. But more so that gold is breaking out, taking silver with it. Why gold and silver? Silver has a choice. It can move with copper, it can move with gold, it can be influenced by both, because it sort of has a foot in both camps. It's a little bit of a precious metal, and it does have some economic optimism type qualities like copper does. But it's clearly not following copper, not even a little bit. So it becomes more of a gold situation. So we didn't prioritize silver because gold looked better, and gold's a more direct relationship to that real yield question. If gold continues, it'll clearly take silver with it. And there's a gorgeous 1, 2, 3. So really your entry on silver at best was front running the 1, 2, 3 pattern, which can be done, front running the pattern, or waiting for the breakout. And that just happened on Friday or the 15th. So that was Thursday. So that was a relatively recent. And anything before that, you'd have to know how to front run the 1, 2, 3 and give yourself enough time for the breakout. All right. So next up, what about NEO for a run into earnings? Okay, let's take a look. Okay, so it'd be nice if I type the symbol in properly. There we go. So, again, I'm gonna reiterate two things. Downward moving market. I'm not saying that NEO couldn't move higher, but this is not the high probability setup. And if you guys are looking at windows into earnings, it's got to be, and that's kind of strange. I don't have any skin in the game on NEO. We played NEO when it was double green, haven't touched it since. Earnings are best played when the structure is already bullish, right? That's what I've been teaching for decades. 642 is something that I've employed in my trading for decades. Using the hot zones of earnings 6 weeks out is where you want to start. So this doesn't meet those criteria on either front. So gang, what you want to do for earnings is not see what's happening this week. It's too late. It's too late for my approach, right? For my approach. If you're playing a theta decay approach or you're playing butterflies, completely different conversation. There's so many ways, really 3 main ways you can play earnings. The way that I like to do it, what is already trending higher, 6 to 4 weeks out in front of earnings, and then buy the pullbacks. It's really pretty silly simple. All right, that's it. There you go. That's how simple it really is. That is your highest probability look at earnings. And so NEO wouldn't meet that criteria, not enough time and a downtrend. All right, dollar. Yeah, I like the US dollar. I like it best against the Canadian dollar. I do think the dollar is going to pull back a little bit today because the euro is at some interesting resistance. I think we could see a little bit of a pullback. Again, I don't care whether we pull back or not. Nothing that I am trading right now needs the dollar to pull back. What I really would like to see overall, look, if the euro continues to move higher, it's going to help my dollar shorts. I am not interested in buying dollars. There's really only 1 or 2 places dollar buys even make sense. That's against the yen and the franc, because they're going to be weak in this strong equities environment. But overall, there's really only been one market that I've been wanting to play for the US dollar, and that is to buy Canadian dollar short US. Remember, gang, whenever you play currencies and you're talking to a 20-year veteran of currency trading via the Forex markets, and then 10 years before that in futures, currencies aren't ever playing the dollar or the yen or the pound only. It's always what versus what. Even, you might say, well, of course, Forex, right? They're pairs. Gang, when you're trading currencies, it's always a pair. So when you realize that if you're playing futures, you better have a really good US dollar narrative to play currency futures, because it's dollar versus what have you. On the Forex side, you get a lot more control over what you'd like to buy. So for example, my favorite Forex trade, I know we don't talk about Forex a lot here, but my favorite Forex trade, and it has been for months, is long Canadian dollar. That's your reflation trade. Short yen, that's your strong equity markets trade. So these are things that you've got to be in the Forex market to be able to do, unless you want to put on an artificial position using futures or even ETFs. That would be long FXC, short FXY on the ETF side, and that would be short the yen, long the Canadian dollar futures on the future side. So we don't have to do those types of things when we're trading Forex. We can just match them up. So keep in mind, dollar weakness is still pretty much what I'm focused on, but there are better combinations. Canadian dollar, Japanese yen has probably been the singular outperformer of all my trading, options, stocks, futures, ETFs, because we're seeing the reflation trade benefit the Canadian dollar, stronger crude oil benefiting Canadian dollar. And again, yen will typically be weak. It's a carry currency when stocks are strong. All right, PayPal. I don't have a terrific edge here. We just finished a continuation 1, 2, 3 that already broke out. And then we're going into earnings. So I'd have to be flat in front of earnings. That's the way I like to play it. But nothing I can do where we are right now on PayPal. Yeah, that 1, 2, 3 already broke through the Darvis right around 254.5. All right. Crazy volume in CLOV. Yeah, this will be the last question, gang. And by the way, I want to remind everybody that we should have a live stream today. I believe Jack's going to be doing the live stream for the futures room, and I'll be with you guys in the Sector Secrets room for the close. We got some Q&A coming up. We're going to go over a lot of the watch list conversations that we're having here. If you haven't checked it out, it's simplertrading.com/sector. And by the way, and speaking of checking out, on Wednesday, this Wednesday from 9:20 to 11-ish, we'll be live streaming my Wednesday session in the Sector Secrets. So if you've been wondering what the heck goes on in Sector Secrets, Rog, what is it that you're doing there that's different than what you're doing in the futures room? Come check it out on Wednesday. I'll give you guys a link, but just giving you a heads up. If you want to block out that time, 9:20 to about 11:30 on Wednesday. This Wednesday, I'm going to be live streaming our Sector Secrets trading. All right. So, gang, I'm going to get out of the way. I'm going to go check out what's going on in the futures room. And I will see you all tomorrow, same time, same station. Pencil in that 9:20 to 11:30 for Wednesday, and I'll see you tomorrow. Be good to each other, gang.